Egg Country offers a wide range of internal growth. If you have a goal in mind and you put your mind to it, your successes can be endless.
There are so many jobs within this company that you can rotate into.
I like challenges. Egg Country gives me challenges.
Yeah, Egg Country is a great place to work. There's plenty of flexibility. You're never tied to your desk. There's a team here that is always there for you.
Yeah, grab your role and run with it, and always be aware of the opportunities because they're in front of you.
And we're going to get started here. Thanks, Jamie, for those numbers here. It's Big Iron, day 3. About to get this started. We'll let some other people roll in here as Jamie joins us up on stage. Just to get things kicked off here, I'm Tyler Donaldson here, Red River Farm Network. We got Jamie Dickerman down there at the far end. Everyone knows Don Wick up there manning the station. And we'd like to thank you all for joining us here and spending your last couple of minutes and hours of Big Iron here with us. Jamie, how about you introduce our panel here?
Okay, well, we have Tyler Schau from AgNet. We have Allison Thompson as well. You're off. I'm off. Am I on now? It's a miracle. Go ahead, introduce him.
Okay, I'll take that here then. From my right, we have Tyler Schau from agmarket.net, Steve Wagner, RCM Ag Services, Allison Thompson, The Money Farm. We know that prices are top of mind for most, if not all of us right now, so we got three great experts up here with a wealth of knowledge. Don't hesitate if you have a question, just raise your hand, and we should have a microphone out there. We'll get that in front of you so that you can we can address your questions here. So, but to start off broadly, guys, let's just, how would each of you describe the current state of these markets and the commodity markets right now? Tyler, if you don't mind.
Well, if you're a producer, they're not great. It's hard to look at very many crops that we grow in North Dakota where there's a profit margin in at the current futures price. You throw on a pretty terrible basis for most commodities as well, and the cash market's just not all that great. So it's a challenge, especially if you haven't done much to this point. And I'm not going to sit up here and blow smoke and tell you it's going to get a lot better as we go through the panel, I guess.
Steve? Thoughts?
Yeah, I think we're looking at a situation, I think Tyler hit it on the head there, where, we're in a downtrend, and the downtrend's not going to end tomorrow. We need to get our exports figured out. We need to find an alternative to China. China has made it clear they are not going to buy from us. That doesn't mean they won't in the future, but it does mean for the immediate future, they're off the table. And if you need any example to confirm that, the $1.60, $1.70 basis, the fact that some elevators up here won't even take soybeans, should be all you need to know. So it's important to market. It's important to market in a timely manner. I'm not going to sell beans with a basis that bad, but that doesn't mean you can't do other things.
Allison?
Yeah, and I have to agree. I know that the mindset's pretty doom and gloom right now across farm country and where prices are, especially when you're looking at the cash market. And unfortunately, a lot of producers do feel like they are stuck dealing with that cash market. But to be honest with you, with prices, as down as we've come, we're finding some support levels here, which is great for the grains, or at least trying to carve out a bottom. It's also a good time to position in the futures market, because if we do end up getting some kind of announcement or a black swan event that does turn our markets around, futures are likely going to be the first one to move, not necessarily your cash bids with your basis. So I just encourage farmers to be looking for strategies this year. I think there's a lot of things in the marketing toolbox that can definitely be used for operations, and I think it's honestly a perfect time to do it.
Got a big WASDE report coming up here tomorrow. We weren't sure if we wanted to talk about it, but I feel like we'd be remiss if we didn't here. 188.8 projected corn yield, bushels per acre, that is. Can we expect any other surprise or any surprises here in this report tomorrow, Tyler?
Our opinion is that it's going to come down, that corn yield. When you get boots on the ground, when you looked at the Pro Farmer Tour, you look at any tour that's going on, or you look at early yield reports, and we've got a pretty wide network across the Midwest. There's a lot of places where we're lagging not just 2024 production on yield, but we're also lagging APHs in several areas in southern Iowa, parts of Illinois. The southern rust, the disease pressures weighed on that crop a lot more than what we saw. The question is, will the USDA be quick enough to respond? Remember, last year they didn't. They continued to bump that yield up as we went throughout the fall until we got the big surprise in January. So it'll be interesting. I think the expectations are for it to come down a little bit in the 185, 186 area on yield.
Yeah.
Does that line up with what you guys are hearing?
Yeah, that's where I'm at, is the yield is more likely than not going to come down. Is it going to come down enough? The trade is looking for a reduction of 2 to 3 bushels. I'm not convinced the USDA is going to do us that favor. They're a little slow to react, and I think they'll need a little more proof. So we may get a slightly smaller crop, but not small enough for the marketplace. They're anticipating cuts in corn and soybeans, and I just don't know that the USDA is going to be that obliging.
Yeah, still expecting a record crop, though?
Say that again?
Still expecting a record crop, though?
Yeah, no matter what, I think that's the bottom line. You have to acknowledge the fact that even if it's 186, it's a record crop. And we need to find a home for that crop. And corn has had that fortunate side to it. We've had good, solid exports in corn. So we're in a situation with corn where, yeah, if you're going to put it in the bin, make sure you capture carry. Whereas with soybeans, it's more a question of finding a market. If we cannot export to China, we need to export to somebody else. Now, I'm sure we'll find it eventually, but you can't sit on beans forever. So right now, the processor has no incentive to pay up. He will, once those beans are in a bin, that door will get locked and locked tight, but it doesn't mean the basis is going to improve $1. This is, again, I think the adjustment we have to make as producers is acknowledging the fact that, basis might improve, 15 to 25 cents, and that might be the opportunity we take advantage of.
We saw a little bit of a blip in the market, if you weren't here for the closing report, about a rumor about a little sale to China, and all of a sudden things started to pop a little bit, just a little bit. How vital is it that we get something done here?
Well, the market's really banking on it. And China headlines and headlines regarding these tariffs certainly move the soybean market. But one thing I do want to point out is we've been trading these headlines in soybeans for a while. These are not new. We've been talking about a record crop coming out of South America for darn near 8-9 months now. We knew it was coming. We knew their planting was late. That means their harvest is late. So right now, all of the headlines that are circulating about big imports in China are these big monthly totals and their records. They should be. It's out of their normal window because their harvest was late. So that is part of the problem, is you're getting just part of that story. You have to remember what happened first. And what happened first was they had a late harvest. So guess what? We had record imports at the beginning of the year. Do you remember that? January, February, March. We had really good exports going where? China. Okay? Right now, their new crop's hitting the market and it's being shipped out. It's not a surprise. We knew they were going to have good exports. We knew they had a record crop, and it's going there. Now what they're doing, they are sticking it to us a little bit. Fair enough, because the price that we have here for our U.S. crop is cheaper going out of the PNW than it is out of South America. So yes, to a point, I do believe they're sticking it to us a little bit, but they've also had these bookings for a while coming out, and they are probably filling up some of their needs for fall. And that shouldn't be surprising either. We're going into a part here where we are still waiting on the U.S. crop. There was some concern about that when they were making these purchases. And also South America is going into their planting. So in my idea, yes, you can blame some of the headlines for what beans are doing, but I think there's also something here to say that the seasonal windows are shifting as well. If we have anything close to what we did last year, American producers and the American export window might be shifting a little bit later than what we've been used to. So in my respect, if China comes to the market, like you saw what it did today to a market on a rumored headline, we don't even know what the actualness of it is, we're gonna see some sharp moves. And those moves come in the futures market. So again, if you're making sales, if you've made sales, I highly recommend taking a position on the board because it's gonna be the futures market that moves here, folks. If we get any headlines or anything that moves this market, it's gonna happen in the futures. Your basis, yes, it's gonna remain ugly until they book trains and we start getting cargoes out. But your futures market's where the move's gonna be. So if you wanna stay in a position to still benefit going forward here, I highly recommend staying in the futures market. So I know that goes against a lot of what the trade is talking about with South America and China right now, but I just wanna point that out that historically and what we've been through earlier this year plays into it. Just don't get so heavy on what the headlines say. You know, we're very headline-driven market, so it's not surprising, but you gotta look at the full story too and the bigger picture.
What are the expectations for the exports in tomorrow's USDA report with China out of the picture?
Well, that hasn't changed. You know, there hasn't been since the last USDA report, and the USDA came out earlier in the year and said their monthly analysis is taking into account what the current picture is for exports. Well, we haven't gotten anything new in the last, 90 days, so we really shouldn't be seeing a huge shift on exports. Could they make a shift and lower it? Yes, I think that's kind of a given. And the USDA is known to be really slow and very well at offsetting. If they do a production loss, they'll do something on demand too, just to kind of keep it stable. They kind of kick the can down the road on a lot of things. So there's always the possibility that they do lower it, you know, ahead of expectations, but in all reality, we don't know anything new than we did last month. So whether they do it, the only thing that they really got backing them is new crop sales are lower than where we'd like to be on a historical average. So they could come in and say that, you know, since we are running behind, that could be something. But I don't think China's out of the picture yet. I just think that it's going to be a later game.
On corn, I think it's largely going to have to do with what they do with the yield. Remember last month they raised the yield considerably. They also came in, they raised acres quite a bit more than the trade was expecting, but they added a ton of demand. And you could argue that we're on pace, and I know exports are really, really good right at the moment, but it feels like there's a little bit of fluff in there on both the ethanol, the export demand, as well as the feed and residual. So I would, you know, any bushel they take out of yield, I think they probably take 80%, at least 80% out of the demand side. So I would see that shifting as we go throughout the year. It feels like really, I hope we hit them. Like, I'll be honest, I hope we crush that much. I hope we export that much. I hope we feed, and I hope we lose a bunch of bushels along the way too. But I do think any decrease to supply is just going to be offset on the demand side because they baked a lot of extra demand into that last WASDE report.
Steve, anything you'd like to add?
No, I agree with Tyler. I think that's where the market is right now. The exports in corn are good. The reality with the USDA is that they are slow to react. And so consequently, I think that soybean export number is a little higher right now than it's actually going to end up being. But we're going to have to see it. We're going to have to get into October and November and realize we're not exporting soybeans to China. So while futures right now are not the worst, the basis is telling the story. There is no place for soybeans, especially in the upper Midwest. So your processor is going to be the market in the near term, and to me, it's a huge if China comes in after harvest, sure, then we can take advantage of it. Remember, there's a tariff in place, but China is COFCO. So if China wants to buy beans, what are they going to do? Charge themselves the tariff? I mean, if they want them, they're there and they'll take them. But the Chinese are not interested right now in doing business with us. They've made that clear, and if you're looking for other ways to confirm it outside of soybeans, Milo, sorghum, we normally have a very robust program for that, and it's not happening. They're taking Milo out of Brazil, just like they're taking their beans out of Brazil. So they're making a statement, and as long as we're on the wrong side, we are not working with them, we are not getting an agreement with them, the American farmer is going to pay for it.
To an extent, though, have you seen cotton exports?
Well, cotton is such a market, and so there's a really good point. Look at the value of cotton right now. Who's going to, I mean, it can't get any cheaper. So yeah, you're making my argument.
But they're buying record amounts of cotton from the U.S.
And
so they're not afraid to make purchase here with the tariffs if they need the product. And I think with all of their sales they've made of their reserves and their stocks, there's going to come a point here where they're going to have to fill those reserves, and it's going to have to come from us. We know South America doesn't have the quality to do that. Same with their wheat stocks. I think it's just a matter of time, in my opinion.
the cotton got cheap enough. That's why they're here buying cotton. If the beans get cheap enough, and we're already cheaper than Brazil, and yet they're still not buying. And the reason being, they have the luxury right now of waiting 60, 90 days and watching beans go down another $1, $1.50, and then sure, why shouldn't they fill the reserves? They're meeting their program with Brazilian beans. They like our beans more than Brazil's, but that doesn't matter right now. China's proving a point, and as long as we have this situation, if the U.S. meets them on a trade agreement, great. But right now, that's not happened. So China it's their ball. And if they don't want to play, we don't get to sell to them.
We had an analyst up here a couple of days ago say basically communist China hates us and they don't want to deal with us, but they're eventually going to have to deal with us. You guys agree with that?
Yes.
Yeah.
I would agree. I hate giving them props for anything, but they've got one advantage over us, and that's they're communists, so they can kind of put the screws to a group of people, and they don't care about the pain that they inflict. Yeah. That doesn't happen in the U.S., which is a really good thing. There's a group of people, mostly farmers, that feel like the screws are getting put to them right now, and they're very vocal. And I've had a conversation with Senator Hovind's office just last week on a different issue, but I brought up the bean issue, and the first comment out of their mouth was, "Oh, we know, we've heard," and the conversation with Besant is that's maybe not number one on the list when they negotiate, but number 2 and 3. Yeah. I think it's there's a lot tied up into the geopolitics there, but they have that luxury of like Steve said, is they'll try to inflict as much pain as they can in the short term. I agree that we'll see sales to China at some point, but I don't think it's going to happen tomorrow.
No.
In the meantime, are there other markets out there for our soybeans, really, but any other markets out there that you think there's upside in?
Cattle.
Fair.
I have a lot of customers that have sold wheat off the combine over the last month. They're itching to buy wheat. There's people out there talking about an opportunity for wheat to go higher. I've been pumping the brakes on re-ownership of wheat. As of right now, I still don't think it's time. I know, last year, everyone usually wants to market to what happened the year prior, which is not always the best marketing strategy. But if you recall, we went in, we put in our lows right before first notice day on the September contract last year, and then we saw almost a $1 rally in the spring wheat market. Really, all wheats saw a heck of a rally in corn and beans. And there's a lot of producers geared up for that. They moved a lot of wheat off of the field. We had a really good bumper crop as you go out west, and they want to re-own it. I think there's an opportunity, but it isn't today.
Yeah.
Tomorrow's report probably not going to have much on wheat, but we will see more of a focus there in the small grain summary at the end of the month. Is there much optimism for wheat heading forward?
Well, yeah, I think there is. I think Tyler's exactly right. It's a timing issue for wheat, because even if our exports aren't stellar, the reality is the U.S. has been for a number of years. We're the backup. We're the people that will store that wheat. We'll hold it. And I think that market domestically is strong enough that I mean, typically the miller will come in after harvest and get his book on between December and March at least. And with prices as cheap as they are, I think he's going to want to buy wheat. And so the opportunity, yeah, I don't think we're, I'll ask Tyler, 20 cents, 25 cents lower? I don't see wheat, Minneapolis wheat getting much more than that down. Can we go lower? Certainly we can. But the reality is it can't get 50 cents or $1 cheaper simply because we're at levels that are, they have value.
Allison, you look like you want to say something.
No, I agree. I think it's hard to be bearish at prices where they are today, but we also know there's always a ready supply of new crop wheat on the market coming on board. And we're talking a lot about big production estimates elsewhere in the world right now, Russia, Ukraine, Australia. We're talking about the Southern Hemisphere. It's just a constant thing the market has. So for me, I've really started to look on the global scale for the wheat market because I think that's where the story lies. Because everybody's talking about, well, global wheat prices are low. Yes, okay, we get it because they're able to supply a lot of cheap wheat on the market, thanks to Russia, is a lot of it. But if you're looking at world stocks on wheat, they are tight, and they've been getting tighter since 2019. Stocks to use ratio on world wheat is the tightest it's been since 2015, a 10-year low. So that means demand has gone up. We're still using a lot of wheat on the global scale, and it doesn't give us much room for a hiccup. So how long can we talk about record crop after record crop coming out of the Black Sea, out of Australia, and North America? I mean, eventually there's going to be a hiccup here somewhere, and it's going to catch the market by surprise. They've gotten so comfortable with that scenario of it getting tighter and tighter and tighter, and by golly, we keep making it, but at some point it is going to bite the market. So I just keep an eye on the world scale. I think that's where the story lies in wheat. If we're going to see this market rally, I think it's worth paying attention to what global production's doing.
We talked about the headlines moving things around a lot, and headlines come in all the time. I feel like, do you guys feel like the market has gotten a lot more headline driven over the years? I mean, to the point where it's almost ridiculous. Like we've had, stories that they haven't even verified yet, and things just jump one way or another, like almost today.
Right.
Your thoughts on that?
Yeah, I think we are headline driven because everybody's trying to front run it. And I think that's just the market we live in today, right? We're not dealing with the floor and a phone call or, a piece of paper or the market news. I mean, it's at your fingertips all the time. So I think there is a lot of trying to front run any major move one way or another, especially with grains depressed and cattle so high. I mean, we're really looking for that headline that's really going to turn it. And I also think the funds have become a big player in part of that too, because they're trying to find a trend. And if that trend is changing, they want to get on it. And unfortunately, that can move the market one way or the opposite way for a day or two. And they're like, oh, now they got the real news. And then we go the other way again. So I think there's a lot of different things at play that play into the headlines that are outside the grain space. So fundamentals are what's key. If we're changing those things, I think that's going to be the major thing to watch for. The headlines are a lot of noise. So I've been really watching what we're doing on a week-to-week basis. I kind of use the Goldilocks analogy. Daily charts are a little bit, too hot, and the monthly charts are a little bit too cold, but the weekly charts sometimes can be just right. So it kind of weeds out some of the noise and the bigger picture things. And so look at the weekly charts, where you start the week, where you end the week. That gives you the better picture than all the crazy stuff sometimes in between. My 2 cents.
Yeah, it made me think of 2019. I was at a deal with Dr. Wilson from NDSU, and he made the comment then that on any given day, it's estimated that 80% of the trades in the wheat market are computers trading with computers. And that was in 2019. And everything I do electronically has gotten more efficient, faster, and cheaper since 2019. So I would assume that there's a lot of AI algorithms out there that are built to trade headlines. That's why you see the massive movement. And that's a lot of times why you see the big movement. And then when the 8:30 morning market starts, things change a lot of times. You'll wake up in the morning and be like, what the heck's going on? And by the time we sit down at desks and get to actually get some humans behind the computers, markets tend to rationalize out a little bit.
give the markets an hour after they wake up. That's usually what I say, and that's kind of what I need. So
Yeah, same here.
goes together.
We have Trump 2.0 in office, and since he's returned to office, I don't think you can argue that he's been aggressive with his trade policies and strategies, tariffs. How does that strategy affect the markets here that we're seeing?
It makes marketing really difficult. I mean, I can tell you that much. Like the policies, love the policies, hate the policies. You know, Trump 1.0 trade war definitely shifted the marketplace, and you know we're seeing the effects of that. China went in and invested billions of dollars into Brazil and infrastructure and logistical capabilities, and we're seeing the after effects. And I think we'd be foolish to think that's not still changing. Now, I don't think that's all a bad thing. As I mentioned, you know, the more we can move the American farmer away from dependency on China purchasing our products, I think is a good thing. The problem is there's going to be some pain in between.
Yeah, in the transition. I mean, it's interesting. I read an article this last week that there's a project underway now to build a rail line from eastern Brazil to the west coast, so they can load off the west coast. It'll shorten the freight by 14 days. It's a huge project. It's going to take a lot of time and a lot of money, but that's been China's foresight. They have learned from Trump 1.0 and have been preparing for 4 years. I mean, they didn't just wake up and decide they weren't going to buy U.S. commodities. They've been out there actively taking market away from people. Grains are our issue, but in the United States, rare earth metals are a bigger priority. And unfortunately, the U.S. administration needs to get that resolved before they get grain resolved. Grain is important to us, but rare earth metals are critical to the United States. And so it's interesting to me that the president is willing to slap tariffs on almost anybody, but he isn't putting any more tariffs on China because they're buying Russian oil. He can't. We need the rare earth metals, and if they interrupt that, we have problems in the United States. So until we figure out how to collectively get what we need out of the market, we're going to have problems.
Well, we know about the seriousness and the negativity around the China story, but any positives that you've seen with these tariffs, any wins that we're getting here?
Well, we have other buyers. I think that's what that's proved. Look at corn exports are running ahead of the 5-year average. Same with actually wheat for new crop. That's huge. We have other buyers there that are taking significant demand. With or without China, I think China's going to be the swing card going forward. I think the soybean market needs to figure that out, that's probably going to swing a lot of things in years to come without a permanent deal. But it's good to see that we do have other buyers. Mexico has been a huge buyer. They've really stepped up, and I don't think that's going to be changing. And a lot of other countries, too, are buying. Who have been top buyers for years, regardless of the exports. So, and I think we could see other countries turn to if China starts going more to South America. That frees up some other needs that they need that they were maybe getting from South America to go elsewhere. I think, and given the economic situation, not only in the U.S. but elsewhere in the world, I think it pays to shop around.
Oh, I was just going to say that real quick. The other one is ending the subsidies on imported used cooking oil was a big deal. That's helped support soy oil, all vegetable oils in the United States, domestically produced. And if we wouldn't have done that, I'd hate to see where soybean oil and thus soybean prices would be right now.
What are there, as long as there's the Chinese void, if you will, until they come back to the table, are there other countries out there, overseas markets, that we should be looking to work with?
Well, I think there are, and I think we've done that. I mean, I'm on the other side of the tariffs. I can't find a positive for what's happened in tariffs. Mexico is our biggest buyer of corn. Why are we tariffing Mexico? We should be working with Mexico. We should be working with Canada because they're our allies. And instead, we've got a situation where we're irritating them. And I don't think that helps. But China has figured it out, and they have been aggressive buyers of our corn. We get the cattle situation figured out with Mexico, that'll be another good thing. They provide a lot of feeder cattle for us. They're a good market for us for our meats. They take a lot of our pork. So I really think the opportunities are there. The question is, can we get past the politics and get the business on the books?
All right. Let's switch gears up a little bit here. Focus more back here domestically. What's going on with managed money right now?
They're short.
Short and sweet.
Yeah, they've been short for a while. For both corn, wheat, soybeans, they've kind of came back to being neutral, maybe a little long. So I think they're kind of in a wait and see mode to see if they got something to grab onto on the soybean side. But for corn and spring or wheat in general, all three classes, and even Europe's milling wheat, they're sitting on extremely short positioned. So I think they're pricing in worst case scenario, especially given where the futures market is too. They'll push the trend as far as they can, or follow the trend as long as they can until they can't. So, you know, are we getting to that point where they are going to start flipping positions? I think it's going to take something to do that. I think we need a bigger catalyst or something new to hit the market. It's probably a black swan none of us have even thought of yet. That could hit the market and turn it. But it's good to see them starting to buy back some positions on corn. They've bought back their positions on the soybeans. So I think the tail's going to be in what they do here in the coming months, what happens with South America's weather. That's going to be another big one that we're going to be starting to talk about too. So on the bean side, I think they're just kind of in a wait and see mode to see how things kind of shake out here before grabbing onto a firm position like they have in corn and wheat.
What's interesting on beans too, they've pretty well been neutral all year. If you look at the November 25 chart, January 1 to now, I think yesterday we closed right at the 50% retracement level in between the high and the low. And that's like $1.10 range on soybeans for the year. That's like 2022, 23, we'd trade $1 range in a week. So, I mean, it's really changed the dynamics of the market. There's a lot of, I do agree that, you know, if we saw some business get done on some new crop soybeans, if we could get the ball rolling, there's a story there. But it feels like we're just treading water and saying the same thing every week.
Yeah, as far as the market goes or the managed money goes, the thing that I found most interesting is the creativity that they're engaging in to get into the market. I've never seen a managed fund where they were short corn, long cattle, and yet that's a position right now, and it's a winner. They have played that to the hilt, and until they see something that says they've got to get out, they aren't. And they've driven those prices down in corn. I mean, there's a large fund short position in corn and no incentive to get out of it. Cattle, record highs. Box beef at levels that we have never seen or very rarely seen. Why should they? Until the market gives them a signal, they're in to win, and it's been effective for them. So we have to at least acknowledge that there are players in our market who are affecting our prices. And that's why when you've got an opportunity to take profit, like we have in cattle, you need to do that, because look at this past week, look at the last 6 weeks. We've had one day in the last 6 weeks where we've moved near limit in cattle or feeder cattle. And that to me is just the precursor. We're going to get to that day where we're not going to go down one day and up 3, we're going to go down 5. But it's not today, it's not this week, and as long as we've got good demand for the product, prices hold.
We got a lot of Big Iron, Day 3, got a lot of Northern Plains farmers here in attendance. What should they be paying closest attention to here in the upcoming weeks, harvest on the way and everything? Ooh, I stumped you guys.
Like as far as, can you repeat the question?
Oh, sure, yeah. Just harvest is on its way here. What should Northern Plains farmers really be paying attention to here as far as, you know, prices and everything?
As a marketer, I'm watching to see what early yield reports are coming in at. I think that's going to start telling the story of what grains are going to do here going into the end of the year. I think that's part of what's going to control prices. But ultimately, if you're needing to make sales, and you can make some cash sales at harvest, if you need to for cash flow needs, I would highly recommend selling on strength. Use strong updates to do that. If we get a 10-cent or more rally, don't be afraid to use it, especially with the way basis is going. Basis seems to be getting worse. So if you know you're going to have to make sales at harvest, honestly, I know it's an ugly thing to say, but I'd probably lock in some basis if you know you're going to have to be hauling in at harvest. And then obviously just make sure you have some type of reowner strategy in place going forward. Do some reownership. I've been doing a lot going out to March just to get us through year-end reports, and also South America's weather window there. And we could also start seeing the corn-soybean ratio come back into play too for next year. I think there's a good chance that we see that flip somewhere along the line. So I've just been recommending to make sure you just have some kind of strategy in play, and of course every operation is different, but you're not stuck with just the cash market. So if you are having to make some cash sales, and I know that's a big focus for everybody this time of year, just know you're not stuck. There are other opportunities to still stay on the board and do some hedging in there in place. So.
If I would say if you're binning your grain, pay attention to the carries. Be willing to sell the carry. A lot of times producers will stick grain in the bin and they'll look out at deferred contracts and see them 20, 30, 40 cents higher than where the upfront contract is, and want to hold it and expect price to appreciate. But carry markets are designed for the deferred markets to work their way down to where the current market is at, which means, SEP corn still on the board, $3.90 something today, I think. $3.90, I don't even look at it anymore, but $3.90-ish, $4 range. December corn at $4.20. Barring anything new, the market should, in December corn, trade down to $4 by the time December goes off. Now, I can't predict what's going to happen in the next 30 minutes, let alone what's going to happen in the next 90 days. So a lot of stuff can change from that perspective, but the producer needs to be willing to sell that carry if they're going to store the grain. The other thing is, if you're not going to store it, like the producers I work with, very few of them listen to me, by the way, but do not delay price. Don't take it, drop it off at the elevator. They're going to hit you with 7 to 8 to 9 cents cost for storage. If you want to re-own that stuff, sell it, turn it into cash, use a little bit of that equity to buy a call spread, buy May call spreads. We've been doing a lot of that here. I mean, that was kind of a recommendation we'd had out early for the last month. Hey, if you've got grain that you can't store, get a home for it, forward contract it. For 15 cents, you could have owned a 70-cent window, 450 to 520 on the May board, to look for that, lower yields, to look for exports to improve, anything that might push the market up. That's the cost of 2 months worth of commercial storage, and you have a floor under the thing. So,
yeah, I agree 100% with Tyler. The DP are the two dirtiest letters in the alphabet. Don't take that corn in. Don't take those beans in. If you have to sell, make the sale, but putting grain on DP is the kiss of death, because those bushels are going to go to the market and they are going to keep your prices depressed. So if you need to find a home for grain, find a home for it. Find a home for it before harvest. I farm just like all of you, and the reality is I've done the math. I hope I've got enough space. I might not have quite enough, but I'm going to fill every crack, every bin, and then I'll wait and see what I've got. If I have a little left, yeah, maybe I have to sell a little with a wider basis than I'd like to. But the reality is, plan for harvest, because if you're not ready and you do have to start hauling DP, you're behind the 8 ball from the get-go. And the other point that Tyler made that I 100% encourage all my guys to do, capture carry. Right now the market is giving you opportunity to lock in better prices. And I know when I tell a farmer corn is, $4.70 or maybe $4.80 for spring, well, I'd kind of like $5. Well, yeah, I'd like to win the lottery. It didn't happen. Move on. Capture the carry that you can, maybe not on every bushel, but on something. If you've got 20% of your crop locked forward, 30%, there's nothing wrong with that from a cash flow perspective. There's nothing wrong with making money on your bin. You've justified why you have it, rather than put that grain in the bin and watch that carry erode. That does not make good financial sense.
There's been so much doom and gloom on one side of the coin. We have to talk about cattle, the other side of it. Things are looking really good there. I want to get each of your takes on this market, what you've seen and what you think may happen here.
The fundamentals are just very strong in cattle. I mean, that's the supply and demand picture is what's driving that market. Cash continues to be pretty strong too, and I think cash has driven it. So until we really see cash fall, I have a hard time believing we're going to see the futures market fall on cattle. I know it's good. It's good to see cattle rally, and I know producers are excited about it too. But it wouldn't take much for that market to turn with as overbought that we are and how much this thing has run. It seems very likely we could see a top very similar to lumber, very similar to cocoa, coffee, orange juice. They just had their big tops put into, and I think when it turns, it's going to turn sharp, and it's probably going to take one day, and we're going to see limit down moves, and it could be the border reopening, something like that is going to start turning that market. But for right now, the fundamentals do remain very strong in it, and I have a hard time believing we're topping, but we are starting to see somewhat of some starting topping action. We're seeing some big volatile swings. We're seeing gaps. The market's been able to fill those gaps in sessions, but those are things that kind of say, well, we're maybe overextending here to the upside. So it wouldn't be surprising to see cattle maybe get into a trading range. I don't know if seasonals are going to come into play this year or not. I don't know what you guys think, but given how strong we are, the best chance of going down maybe a little bit is trending sideways. But ultimately, it just seems like a very strong market. And there too, the funds have been long for quite a while, riding up a very solid trend.
I work with a lot of hedgers, and if you own cattle, if you've got a cow-calf operation and you don't have them protected, that's on you, is what I tell my customers, not on me. There's plenty of ways to manage that risk that is relatively reasonable. If you're a backgrounder, that's a little bit different story. I would agree, fundamentals are really, really good. I don't see that changing anytime soon. Demand is really strong. People like to eat beef, and I don't blame them. It's really tasty. She mentioned the cash market. It's been supportive. That's not changing. The futures market tried to break Tuesday, and it did. It went limit down in the feeder calf market. Auction barns didn't notice it. They maybe were off $2-3. This morning, we work with some feedlots in the Southern Plains. They were passing on 238 bids from packers and asking 241, 242. So cash fats aren't breaking. There's a very large group of people that used to kind of control that market, and they've been out of control for well over a year. I don't think they like it. They're trying what they can to change that sentiment out there, but for now, it looks awfully strong.
Yeah, you've got fundamentals in the livestock market that are definitely at play. Feeder cattle have pulled back. We're not killing the heifers we were 30 days ago. So we do have heifer retention. Do we have heifer retention at levels high enough to make a difference? I don't think so. I mean, the numbers are smaller, but the reality is they're still pushing a lot of heifers into the feedlot and finishing them out. The other side of that is, while the actual number of cattle in lots may be down, the reality is the ones that are out there are getting fed. They're 18 to 20 pounds bigger, and you don't need as many cattle when you're feeding everything on the hoof, 18 to 20 pounds bigger. So the reality is the demand right now is good. The supply is keeping pace. At some point, that's going to turn. One of the indicators that has play in that is typically the Corn Belt cattle will lead the market for a while, but ultimately Southern Plains cattle will take that market back. That's just happened in the last few days. Corn Belt cattle are cheaper than Southern Plains cattle. How long does that stay that way? And is that the beginning of the end, or is that just a little hiccup in the market and we'll see those Corn Belt cattle return November, December? I don't know, but I know that when that happens, that's an indication as to what the demand is for beef.
Sure. Do you guys see feed costs rather and cattle profitability? Do you see them aligning into next year?
That's the whole secret to high cattle prices. I mean, every feeder we work with's got under $1 a pound cost of gain. If you want to know why cattle are high, I think it boils down to cheap feed. And we work with a lot of producers in western Iowa where they feed some cattle, but they're also big corn producers. And for the last year, all they've told us is they'd rather walk the corn off the farm than truck it. So, I mean, I think it boils down to cost of gain. That's the difference between now and the 2014-15 era when we saw the last cattle cycle peak.
One of my producers out in Idaho sold the last, he had his calves come off in August, and then they have to go into the mountains and chase out the strays. And they pulled their strays out. He ended up with between $2,800 and $3,000 a head. I struggle to see how anybody can feed that animal and make money. That does not make sense to me. But the reality is somebody was willing to pay it. And until that changes, until that mindset changes where the market looks at those cattle and says they're too expensive, we can't do that, this thing stays like this. And I totally agree, Tyler. That is the mindset. I'd rather feed cheap corn and have cattle. You talk to some producers who raise cattle, and they did very well this year. And then they're buying cattle back, and they call and say, how do I hedge this? And it can't be hedged profitably right now. And so their response is, well, it's your job to figure out a way. Well, there's only so much a broker can do, but that's going to continue. They're going to continue to buy those cattle because they did well last year, and well, that's what I do. And so they're going to continue to risk by buying expensive feeder cattle and feeding cheap corn.
You left out the fact they've done well in the last 3 turns of cattle. And if they don't buy more cattle, they got to pay tax. So.
There's the other side of it. I'd rather feed cattle than pay taxes.
Sure. All right. Well, we have about 10 minutes left. Again, if anyone has any questions, please don't hesitate to raise your hands here. Last chance to pick our experts' brains here, if you will. So, if you don't mind, for with the time we have left, I want to look ahead here to 2026. We touched upon some of this already a little bit here, but really, I'm real curious about any advice that you guys would have for farmers that are trying to market in a volatile world. If you do have advice, what would it be?
I've fielded a lot of questions over the last few weeks on 2026 soybeans. A lot of producers in North Dakota that are looking at increasing soybean acres. There's a lot of producers in Iowa and Illinois. I had another story this morning of a 1,500-acre farmer in Illinois claims he's going to do 100% soybeans next year. Now, my caveat to all of that is there's a long time between now and when seed goes in the ground, and a lot of things can change. But I do think if the market doesn't change, the market dynamics, you're going to see a lot of producers looking to increase acres into crops where the inputs are less than what you're going to see on corn. And so if you're in Iowa and Illinois, you've really only got one choice, and that's soybeans. That's the only other option that they're going to grow. If you're in North Dakota, one of and Minnesota here, that's one of the really good benefits we got is an array of different crops we could grow. But as far as if you're looking at low-cost alternatives, the biggest one right now with the cost of fertilizer is going to be soybeans. And so I've fielded a lot of calls on what we can do on soybeans all the way out to November 26. A lot of producers, don't want to sell anything. Definitely they don't want to sell anything they haven't put in the ground yet. We've been looking at option strategies, ways to kind of to get some protection on that in case we do see a 6 million acre switch where we see a ton more bean acres come next year. But the other caveat to that, and the reason I'm not a big fan of selling calls to pay for put options, is if we have a harvest dilemma with Brazilian soybeans this year, yes, they're going to have a lot of acres, but if there's a weather problem, you just see beans go up quite a bit, and the sold calls really make farmers mad, especially when they haven't put anything in the ground yet. So we've been looking at short-dated options. If you don't know what that is, reach out to one of these two, and they'll explain it to you. So.
Well, I agree. I think this is going to be a year where we are going to see that shift, and that's the question that I don't have the answer for, is the high-priced inputs. Fertilizer hasn't come down, and if you're going to grow corn, you're going to need fertilizer. And so the reality is soybeans become that first alternative. I don't have a problem with somebody growing beans, but I do have a problem of putting in a bean crop and just rolling the dice. If you're going to plant beans, you're going to have to sell them, and I think you should be selling them early. And there are opportunities, there are other products. One of the things that's out there, and again, it's not something you get aggressive in, but utilize the OTC, where you can pick up a premium in a marketplace and accumulate a better price over time. You can do the same thing with options, but it's a question of structure. It's a question of what works for your farm. So if you're going to grow beans, and I think the market is telling us that the farmer is, then look at marketing beans. Don't just sit back and wait. Look at getting something marketed so you're prepared for next year.
Anything to add to that, Allison?
Man, they covered it. I don't know. I guess I agree. I think that corn soybean ratio is going to turn in favor beans more this next year, but we don't know what the growing season is going to be like. South America hasn't put their crop in the ground yet. I mean, there's a lot of unknown questions, and of course, that's where we come in, and the futures board comes in, because you can do a lot of things with prices and protect some things. So as markets go and going forward, it's just really good to have a plan and have some opportunities and just be ready to pull the trigger when you can. I'm always a fan of working orders too. If something looks good today for new crop prices, put an order out there, leave it and forget it. It could be your best sale and hope it's your worst. So I'm always a fan of looking at things that way too. If you're more of a cash person, you're not stuck to just looking at new crop just with the board either and on paper.
Sure. All right. So we just have a couple minutes left here. I'd love to get your guys' final thoughts. Everyone get your tickets out.
Everyone take out your ticket. The winner is 535-6964. Red ticket, 535.
Nope, not here. I'd love to get your guys' final thoughts. What do you want to send these people here home with, to think about, to consider?
Well, we've mentioned multiple times about different strategies you can have for re-ownership protection. There are a ton of different things you open yourself up to when you have a futures and options account that you don't if you're a cash marketer. It doesn't always mean that it's going to make the decision easier. In fact, a lot of times it's like drinking from a fire hose, and now there's 100 different things you can do. At the end of the day, you still got to make a decision. And probably the best advice I ever got from one of the guys I worked with when I first started in this business is not making a decision is still a decision, and it's usually a bad one.
That's true. It's very true.
Steve?
Yeah, I think this is a year we haven't seen in a while. It's probably been, 7, 8 years since we've had this kind of a challenge. And I think this is that time where producers need to really know their numbers, know your inputs, know your cost of production. And if you can make money, any money, growing crops, get some of it on the book. I don't care if you do it with futures. I don't care if you do it with an elevator. Do it. Get something on the book so that going forward, you're not 100% exposed. You might not know your corn, your bean, your wheat ratio, what you're going to plant, but you know you're going to plant. Nobody goes into a banker and borrows money for inputs for a crop and says, yeah, but I don't know what I'm going to yield. I don't know if I'm going to be able to pay you back. You know exactly what you're going to get. And you carry crop insurance if you don't get it. So don't fall short on the marketing side. Step up and get something done. I don't care where, but step up and make marketing decisions for the 2026 crop. Because it's not going to be a quiet year. It's going to be a wild ride.
Allison?
Yeah, I'd say just, try and stay ahead of it. Stick to a plan. Be thinking forward. You have to be. It's really hard to market looking backwards. Easier to say what you woulda, shoulda, coulda done, but we have to be very proactive. I do believe, and man, I just stick with your plan. I really would.
Sure. Have a plan and stick to it rather than inactivity, as you.
Stick to it.
Absolutely. All right. Well, words of wisdom right there. We'd like to thank you all for joining us. Let's give a round of applause for our panelists, if you don't mind. Allison Thompson, The Money Farm, Steve Wagner with RCM Ag Services, Tyler Schau, agmarket.net. I've been Tyler Donaldson, Jamie Dickerman down there. Enjoy the rest of the final day of Big Iron, everyone. Thanks for joining us.
Thank you all.
Thank you.
It's all about nutrient efficiency, right?
Exactly.
I've taught you all the things that you know.
Oh, yeah. Here we go.
I'm Sherry Cook. I'm passionate about helping farmers with crop nutrition. And I'm here to help you with your operation.